Sandip Sabharwal joins us. Let's take a conversation forward. Sandeep, lot of moving parts again. When geopolitics and tariff got settled, suddenly bond yields are spiking again, and there is a new tax, template which would be passed by the U.S. administration soon. Do you think this is something which we need to analyze? I mean, sitting in India.
I think bond yields don't matter so much in my view because of the fact that we are not in a crisis situation, and the rising bond yields are as a deed of the. Basically, it's a sort of uh, follow through of the misdeeds of fiscal imprudence in those countries, which will lead to higher longer term bond yields and slower growth over the long term. So until and unless we are bothered about a possible default, we should not be bothered so much. And there's a clear divergence between bond yields of various countries. Like you look at bond yields in China, they're at multi-year lows. You look at bond yields in India, they're at multi-year lows. So I think there are divergent trends all over. European bond yields have also got unhinged from US bond yields. So until and unless we reach a situation where there could be a crisis of which is sort of default related, then those issues could be there. On the US tax changes and all, I think the only thing which should bother Indians is the remittance tax which has been proposed, which could hurt uh, the flow of remittances to some extent and increase the cost for the Indian diaspora staying in US. So I think that's something which will be a small concern. X of that, nothing to do with India.
Hi, morning. Let's analyze some of the earnings then. Sun Pharma, you tracked this one. What did you make of the numbers? Because while the India faction seems good, weak US and more importantly, cautious guidance now amidst all the global uncertainty at play is what the management has cited.
Yeah, so the reported results are operationally were good because they had some extraordinary write-offs, etc. But the guidance, obviously, which they have given for this year is muted. So top line growth is fine, but they are indicating some sort of increase in expenses in the short term, which would potentially impact margins. So I think to that extent, earnings growth, which at least for this year becomes subdued and potentially for next year improves as many of these things play out. So my guess is that we could be in for subdued return period for Sun Pharma for some time now.
Okay. Aditya, there's a unusually strong move in TTML. I mean, traders, they love the ring of TTML. Even though landline does not use the TTML phones now, but TTML, the ring for a trader is great. Where is that stock headed?
A very difficult call, Nikunj, honestly, because this is really a shot in the arm to take a call. 85 is something which is the next immediate resistance on TTML. Would I recommend somebody to go ahead and buy afresh? Definitely not, because we've seen the kind of moves the TTML stock shows. If you already own it, maybe look for a target of 85 on the upside, place a stop loss somewhere around 70, 71. Apart from that, I don't really see much room on the upside. Even if you get a move beyond 100, that will be a surprise move for me.
Sandeep, you remember TTML, the landline service provider?
Yeah, I have a landline phone by TTM.
Still?
Yeah.
What's happening in this
One of the
stock?
very few people who still have a landline, I guess.
Yeah, but I think Tatas have discontinued telecoms. I don't think it would be TTML landline for him. It cannot be
No, it's
TTML.
it is Tata teleservices only.
Okay. I really need to find out, more details about that. That means. Okay, so you are a happy user, but
Yeah, happy user doesn't mean that the share has any value. I think share should be valued at zero only.
it doesn't have operating business. I mean, frankly, does not have a big operating business.
Yeah, so I think this V, Vodafone, and this Tata teleservices and all, they have no value actually. So I think these are just punting stocks. There's no reason why it goes up. There's no reason why it goes down.
TTML, as simple as that. Um, Yeah, it's such a scattered market yesterday that sometimes you really, struggle to find trends also. Just give me a second. Someone's taken my screen away. I don't know why. Just give me a second. Just trying to see if anything interesting in terms of the market action yesterday. Well, BSE yesterday reversed. Aditya, before you log out, where is BSE headed? Has it reached its point of climax now? Because this has just been one of those ranked outperformers, whichever way I look at the cut.
There is definitely a bit of a cool off, Nikunj, I would say, and it's a welcome to cool off, I would say, on the back of the news flow that we got yesterday. If you get an opportunity somewhere around 2200, between 2200, 2100 on BSE, I wouldn't shy away from taking a long trade here, at least for 2600 to about 3000 on the upside is what I'm looking on BSE. So given this corrective move that we are witnessing in BSE, I think it's a welcome move. And if you were missing out, if you had a FOMO of not getting long on BSE, this is probably the best opportunity for you to go long on BSE and look for a target of 3000. Hold it for some time and you will see decent upside.
Okay, Aditya, we'll let you go on that note. Thanks as always for your time. Let's
Pleasure.
quickly take it across to Ashesha. There's a Sensex revision which is slated for today, and of course, flows are expected to commence from June 20th. Ashesha is here to talk all about the inclusions and exclusions, and of course, the likely rebalancement on the FTSE as well.
Well, yes, FTSE and Sensex rejig announcement is expected to come in later today, and IIFL Research has come out with a report on expected inflows and outflows on account of this rejig. So first up, let's talk about FTSE, where they are expecting about $131 million of inflow on account of this adjustment for Hyundai. For Vishal Megamart, about $75 million of inflow. For Swiggy, $60 million, followed by NTPC Green and Vari Energies at $50 and $44 million respectively. So that's as far as FTSE rejig is concerned, and 5 stocks where IIFL Research is expecting inflows on account of this adjustment. Apart from that, let's also talk about Sensex rejig, where IIFL Alternate over here says that they are expecting inflows for 2 stocks. One is Trent and one is BEL or Bharat Electronics. Inflows of $278 and $275 million respectively, followed by Nestle, which is expected to be removed from the index, which could lead to an outflow of about $210 million. And IndusInd Bank could also be removed, which could lead to an outflow of $135 million. So several stocks will be in focus. This, of course, is an estimate which IIFL Alternate has come out with, and these could be the possible inflows and outflows on account of Sensex and FTSE rejig, which is expected to be announced later today.
Sandip, let's spend some time understanding defense stocks now. And the geopolitical tensions, in a sense, have really exposed the fact that we need to be more and more really be dependent on new age tech now. Given that new age defense tech is going to be where the investment is going to move, which are the best defense stocks to invest in? Because HAL, BL, while they are big, they are good, they have cutting edge technology, do they have enough which can qualify them as the new tech companies or the new age defense companies?
So Bharat Electronics certainly, and that's some stock we have also been holding because they are working on various components, electronics, and so they have very high-tech operations also. So I think to that extent, they should clearly be one of the leaders. HAL is more on the because of helicopters and uh, fighter jets and all of that, and engines. So there, I think we need further advancement. So can we get technology transfers to HAL to actually make fifth, sixth generation fighters is something we need to see, because what they are making right now is something of the past, but still they have orders and they will execute and their earnings will grow. And I think on that front, maybe some more things need to be done. On the private sector side, there are several companies working on various things, but the information flow is limited. So it's very tough to actually gauge what which company is doing. So there are a few names which are there, but then at these prices after the run up, many of them are trading at as high as 100 P also. So people need to wait out to look at many of those companies.
The stock which you've liked, Sandeep, for a really long time, and this is a really old company, Tech Wabag, up 8% yesterday. Where is it? Sorry. Sandeep would remember, he's a shareholder. What, 7% up, 8% up yesterday?
Yeah, it's on your screen now.
Yeah, 8%. I can see it now. Okay, so you still own it? Do you still like it? And why do you like it still?
Yeah, the company is doing very well because of the fact that they are operating in a business segment where they have significant competitor advantage. So when people talk of moat, in many businesses on the capital expenditure, capital equipment side, the actual moats are limited, but here they have a definite moat on the water side. They've been winning larger and larger orders globally, which are multilaterally funded, or in India, which are central government funded. They have a strong order book, and the good part is last 2 3 years they have also been generating significant free cash flow, so they have become completely debt free. And on valuations, I think it is not a cheap stock in the traditional definition where stocks used to be very cheap. But then on the mid cap side, looking at the earnings growth picture vis-a-vis the valuation, I would think that the stock still has substantial potential.
Is the Protean story for us. The fact that they didn't get shortlisted for PAN 2.0, of course, took its tumble on the stock. But barring this knee jerk, do you continue holding on to the stock, or do you think now it's a story which is long gone?
Oh, we have never had a holding in Protean per se, but then I've tracked the company, and uh, like the managements which come out and say that when there's a positive, it benefits them a lot, but when there's a negative, it has no near-term or short-term impact and all. Those managements typically it's tough to trust them. So I think we need to watch out for what happens over the next few quarters and see how the things pan out. I would think that given that future growth prospects get compromised, the current valuations still should are looking high.
In fact, we did chat with the management once they didn't get shortlisted to the PAN 2.0 list. Here's what they told us.
PAN 2.0 as an RFP is where I'm saying we did not pencil in any growth from that in our projections. And again, that is where the ambiguity came with the market, where we are clearly stating that our growth plans remains stable as they are. Already have mandates in the space of agriculture, health, education, digital commerce and transport and mobility with ONDC. So that's another vertical which is growing for us. Four businesses continue to show growth and are stable, and there is no impact of this particular RFP win or loss. And likewise, the new businesses, we are on track to show whatever we have been discussing earlier, and they are on track for us.
So Sandeep, at this juncture now, markets have run up. We are no longer bombed out. We are no longer and we are not in a froth. So how do you see markets moving? I mean, the journey from fear to greed, will that happen? So another 10-15% from here before we reach that climax? Is that how the pendulum could swing?
Yeah, it looks like. I think that will happen. So we will reach that stage in a few months, in my view, and then the markets will give some sort of correction. But I think till that point of time, they could still be decent upside in many companies. So
we know
I
L&T,
would
we
think
know.
that
Bajaj Auto, we
in
know.
terms of-
L&T, we know. Anything apart from that?
So on the large cap side, I think so banks and all, ICICI and all that we've been holding for a long time. But I would still think M&M will still do well. L&T, like you rightly said, will do well. I think the Reliance outperformance cycle should still continue. I think Bharti will continue to do well. So many large cap companies, in my view, should continue to do well. The outlook where the outlook is a bit hazy are sectors like technology, pharma, etc. Except of except that, I think on the large cap side, most of the other segments look fine.
Taparia as well joins in on the show. Chandan, hi, morning. What is it that your take on the index is? It's been a little bit of a one up day, one extremely down day, one consolidation day kind of week so far.
Yeah, good morning. Thanks for having me. So yes, I believe that market has really seen a decent run up in last almost 25 trading session. Really do well from 21,740 to almost 25,100 marks. And if consolidation happen, that will be good for the market. As of now, I believe that 24,444 could act as an immediate support. Till that level is being respected, index has again potential to bounce towards 25,000 marks. The only concern is that index started to form lower highs from last 4-5 trading session, and that has to be negated. If market negates the lower highs, then it will start the next leg of rally. So I'm closely watching two level in the index. Key support at 24,444 and surpassing of 24,750. If market surpasses 24,750, then I believe 25,100 or much higher level could be seen in the market. So I think we have to be conditional to trade the market scenario in this level. Looking at the Bank Nifty index, here I'm expecting some positive strength because this index has been consolidating in a range of 1,000 points in between 54,500 to 55,500 marks. And this consolidation is happening from last 9 days. And today it opens above 55,000. It has potential to spike towards 55,250 to 55,555 marks.
Right. So they didn't discuss ITC's numbers with you, and I was just going through the numbers. While of course there's been volume-driven growth that they've seen for the cigarette segment, but FMCG and paper businesses have been weak, and also there's been a sharp escalation that they've seen in leaf tobacco prices. What would you make of the stock and do here?
Yeah, so there doesn't seem to be any major trigger at this point of time because of the fact that cigarette volumes are trending at reasonable levels, but that is no longer a trigger for ITC. The FMCG business seems to be faltering again with muted growth, although the entire FMCG segment has seen muted growth, but then because ITC has been trying to grow that business as a complement to the cigarettes business, so I think slowdown there impacts them. Paper, of course, we know the paper cycle is down, so all paper companies are not doing well. And one of the bigger profitability driver companies, ITC Hotels, is now associate company because it's no longer part of ITC. So I think near-term earning growth pictures looks muted. So I don't think there's much upside potential to the stock in the near term. And I think people, because of these results, there's a lot of the long-term holders might not sell also. So I would think a range-bound move.
All right, so a range-bound move expected for ITC. No major triggers cited at this point in time. But moving on then, the board of the RBI is reviewing its economic capital framework to assess the surplus liquidity transfer to the government. Ankur Mishra tells us what the magic number is likely to be. Ankur?
Yes, the Reserve Bank of India may announce a dividend transfer to government very soon. As we understand, a meeting is going to be held. And remember, last week there was a meeting which was conducted by the central bank on the economic capital framework, which is the basis of determination of dividend transfer. Remember, last year there was a record transfer of 2.1 lakh crore to the government, but the expectation this time is even more. All the economists are penciling in somewhere between 2.5 to 3 lakh crore and even more to the government this time, but it will be interesting to see what will be the scenario as far as contingent risk buffer is concerned, because last time it was kept at 6.5%. The mandate is to keep between 5.5% to 6.5%. So that will be decided in the meeting which is likely to be held. Now, as far as union budget is concerned, we understand that 2.56 lakh crore was the amount which government was expecting as dividend transfer, not only from Reserve Bank of India but also from other PSUs. But if you see the expectation which is there in the market is much more than that, and hence the bond yield movement is happening.
The one stock that I want to bring up is Zomato or Eternal now. 229 is where it shut shop for itself. Chandan, just come in the charts because Zomato has been stuck in this very range bound sort of move around 220, 230 thereabouts for a very long time now.
Yeah, so we have slightly positive on the counter, but just 3 or 4 days back, it gave a failure breakout about 245 marks. It made high near 247 and drifted lower and totally got stuck in a range. The bigger and broader range is in between 200 to 240, and medium term range is in between 220 to 240. We have noticed that in last 24 days, 3 to 4 times it took support near 220 and turns higher. So we have to play the trading band. The good part is that on last trading session, it formed a bullish candle with some follow-up activity. So I believe 220 can be utilized as a support to again play the bounce towards 240, 242. And if this time, if moves about 245, then we are expecting the next bigger rally in the counter.
Sandeep, is Zomato the obvious option if one is looking to, bet on the online food delivery platforms and quick commerce? Because Swiggy, from what I see, is trading almost 20%, I think, below its IPO price.
Yeah, so as we've discussed in the past also, the unfortunate part is that away from the cash generating food business, these companies are investing more and more into the cash burning quick commerce business where there's really little moat, and plus they are investing in their dark stores, etc., which further reduces the long-term ROC potential. I think long-term valuations of these companies, which we could have expected a year back, have potentially moved down significantly. Now, once this entire investment cycle gets over, at that point of time, we need to relook. So, which could be maybe a year later.
Sandeep, just wanted to have your take on some of the other result candidates and if you can help us analyze Ramco Cement numbers, because though the numbers were not that great, but given the price hikes that we are seeing for months now and what these brokerages are highlighting and even the management, that the prices are on the rise, especially for the southern markets, and Q1 is expected to be a good one in terms of that and should help the margin performance as well. But what's your current take on Ramco Cements? The stock is already showing an up move of late, but do you believe a lot of it is already in the price, or do you believe that this story can pan out well?
It all depends on whether these price hikes stick, because over the last few years, like now it's been 3, 4 years that cement companies try to hike prices, but then the demand is not there and supply increases are much more rapid, and those price hikes don't stick. Now in the south, many of these companies sort of in concert have tried to increase prices now, which have stuck around for some time, but then it's just a few weeks. So we need to see how that pans out. So it'll have two effects. One, profitability could improve, but then the volume growth will decline because the magnitude of price hike is very significant, but still it aids profitability significantly. So it all depends on that. Overall, the cement demand supply scenario for pan India is not as good because the supply is much greater than demand, and the supply increases also have grown much more rapidly than demand. So I would think that it should be wait and watch.
NASA also came out with its numbers, and I'm just going through the details because the tide surely seems to be turning for them. They've managed to defy the market expectations, and much unlike their previous few quarters, it's actually been a beat that they've seen. The revenues have seen an uptick of about 13%. Their new brands have grown quite strongly. Mamaearth as well saw an improvement coming in. Management appeared reasonably confident with the distribution realignment as well, which is now, according to them, showing positive results. Although optimism was still a little bit measured, but that really is, what you had from Honasa. And Sandeep, the listed pool in the BPC segment is very, very limited. You think Honasa is a good option now, given their earnings this quarter?
So some trends are positive, like in terms of growth, it's positive. Their focus on curtailing advertisement and marketing expenditure next year is a positive move. However, the current valuations do factor in many of these improvements because the valuations of the stock are not cheap at all. So I would think that the results and outlook potentially create some upside, but not significant. So because the valuations are stretched.